Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to talk about SoFi. The fintech company has just released their latest quarterly earnings, and they shared some impressive results. The company's stock absolutely skyrocketed after the earnings came out. The market was very pleased with the financial metrics, and some investors on Wall Street actually deemed this to be an outstanding quarter for SoFi. So in this episode, we're going to take a look at the company as a whole. I'm going to do a quick analysis on their business and go over their latest quarterly earnings to what led to the 5% increase in share price they saw on the date of the earnings release. But before we do that, I am going to ask you to please hit that like button and subscribe. If you're new to the channel, I'm the Gen Z Investor, and on this channel we talk about the stock market, go over any major market news, and we track the progress of my personal stock portfolio that now has a value of $160,000. And now we're going to move straight into SoFi. This is a rapidly expanding fintech company that offers a wide array of services all through their one digital platform. And SoFi's goal is to be an all-in-one service so younger consumers can log on to their digital platform from anywhere and have access to every single type of financial service product they would need from a traditional bank. And we can see SoFi has done a great job of expanding their offerings. They now include personal loans, traditional banking, they offer credit score and budgeting, private student loans, student loan refinancing. You can also invest through the SoFi platform, get a mortgage, a credit card, insurance, or even an auto loan. So what their goal was to offer everything you would need from a traditional financial institution in one easy to use, mobile friendly, and also targeted toward younger generations by being fully digital with very low fees. And now we're going to take a look at the actual earnings report that SoFi just released. So in the quarter, the company reported $424 million of total top-line revenue, beating the prior year result of $272 million. And for this quarter, analysts were predicting around $399 million of total sales, so a massive beat over the top-line expectation. SoFi also reported a loss in the quarter of $75 million, or 9 cents per share, and analysts were expecting the loss to be 10 cents, so a slightly better result on the bottom line as well compared to the analysts' expectation. They also reported EBITDA of $44.3 million, which is a more than 4x increase over the same quarter in the prior year, which reported EBITDA of only $10.3 million. And the expectation for this metric was set at 29.1, so again, another major beat over analyst expectations. And the company also had a major highlight by raising guidance for the remaining fiscal year, and they have now upped their model to $115 million to $120 million of total EBITDA, up from around 104 to 109 from the previous quarter's expectation. So this increase in future guidance instills a lot of confidence in the company's operations going forward over the next few months, and that helped lead to the major 5% jump in share price we saw in the market today. The forecast implies yet another $45 million of adjusted EBITDA in Q4 at the midpoint, which among many other factors should be well received by investors. So overall, this company reported some very strong results, beating on the top and bottom line. The EBITDA crushed expectations, and they raised their guidance for the EBITDA for the next quarter going forward, and they're predicting around $45 million in Q4. So overall, a very strong quarter from SoFi. We're now going to take a quick look at the company's stock chart to go over their recent share price performance. So we can see SoFi currently trades for $5.73 per share, which implies a market cap for the company at just over $5 billion. And on the 6-month chart, it doesn't really look too bad, only down 9.48%. But if we zoom out a little and go to the 12-month chart, it paints a completely different picture of SoFi. They are now down over 74% in the past year. So during the past 12 months, the company's taken a major tumble. Throughout 2022, all the riskier companies who are not yet profitable have seen a major pullback in share price. Investors are pulling away from these high-risk names and deploying capital into more conservative investments. So for SoFi in particular, although the company continues to grow revenue and users quarter after quarter, and like we just saw from the latest earnings, it seems like their operations are going very well, their share price continues to fall with the downtrend in the overall market. So if you're a believer in this brand long term, now may be an excellent opportunity to actually buy the company when they're trading very close to their 52-week low. And before we take a look at SoFi's latest investor presentation, I do want to make one idea very clear to all potential SoFi investors. Although the company does look like it's performing very well, we're next going to take a look at their investor presentation, which shows all the positives in their business right now. You have to understand this company is not yet profitable, they have not posted positive earnings, and they're relying on outside debt in order to fund the business and in order to grow. So that comes with a lot of associated risks. This company cannot sustain itself right now. They're relying on outside financing in order to grow their business. So make sure you take that into consideration when evaluating SoFi, and just because the stock did trade at $24 in the past does not mean it will get back up to that point or even surpass it anytime soon or ever. So make sure you truly understand their business model, you understand the company's future path to profitability, and make sure you have a strong belief in the SoFi brand long term before making any investment decisions. But now if we jump over into their investor presentation that they just released with the latest earnings, we can see some very strong positive results that may lead some potential investors into starting a position or adding to their existing holdings. So if we take a look at their member base, they added 424,000 new members in the last quarter, bringing the total to over 4.7 million, representing year-over-year growth of 61%. And we can see at quarter end 2019, they only had 864,000 users, so they added just under 4 million users in a 3-year time span, which is absolutely incredible for the financial service industry. For a new consumer to log into a new app, especially in the finance industry, it's very difficult because you have to trust the bank that you're using, and for a young fintech company like SoFi, it's very hard to gain those early consumers' trust, and to add over 4 million customers in only a 3-year time span is absolutely incredible. And if we take a look at the products added in the quarter, they added 635,000 new products, bringing the total up to 7.2 million, representing 69% year-over-year growth. So pretty much what that means is they have 4.7 million users, but 7.2 million products in activity right now, meaning the average user has around 1.7 products in use. So a lot of their users are using more than one SoFi service on the digital platform right now, which is exactly what they want for the company, and that's their entire objective. They want to get consumers on the platform, and they want to get those consumers using all the different SoFi services all on their one simple mobile app. And if we take a look at the quarterly performance in terms of revenue, the adjusted revenue in the last quarter was 419 million, which grew 51% year over year, and they recorded record EBITDA of 44 million, representing 332% year over year growth. So of course, all-time highs for revenue and EBITDA in the latest quarter, and we can see some massive acceleration. We can see from Q3 to Q4 last year, very minimal growth. Then a little bit of an up jump in the following quarter, followed by another minimal 10% total revenue increase quarter over quarter. But now we've seen a major expansion once again. In quarter over quarter from Q2 to Q3 this year alone, we saw over 15% revenue growth, which is very rapid, especially for a company once again in the financial service industry. And if we take a look at the revenue on an annualized basis, they are now projecting at over $1.3 billion of revenue in the trailing 12 months, again up over 30% from the prior year, and that prior year 2021 grew by over 50% from the year before. So overall, this company continues to expand at a rapid rate. And analysts on Wall Street are very bullish on SoFi right now. They have a buy rating from 13 different analysts. We have 5 strong buys, 3 buys, and 5 holds. So the average consensus from these 13 different analysts is a buy rating on SoFi at this current point in time. One thing I do want to note before we wrap the video, SoFi is not a company I will be personally investing in. If you're a follower of the channel, I invest in blue chip dividend paying companies, and I have very strict and conservative rules for what companies get my capital. I only like companies who are cash flow positive, post consecutive years of positive earnings, those earnings continue to grow over the long term, and they have a well-established business model with very loyal consumers. So I'm not into the high growth plays. Many investors are, and that's great. That's your strategy, that's not my strategy. So although SoFi to many people may be a fantastic company, I'm not saying it's not in terms of their fundamentals or their business model or their future growth, but I'm saying personally, a lot of investors who are subscribed to the channel want to know if I'll be buying the company, and I will not. It just doesn't fit my investment thesis. It doesn't fit the plan I have with my personal portfolio. I'm strictly a blue chip dividend growth investor. I like companies who have that consistent cash flow and that predictability in their operations, and for me, SoFi doesn't have that right now. So at this current point in time, with where they are, still losing money quarter after quarter, it's still too early for me. We will see what happens in the future. But overall, that was kind of a quick earnings video on SoFi. It's a highly requested company in the comments down below, so I thought it'd be very good to go over their latest earnings. The company shared great results, the stock jumped after the earnings came out, and overall the last 3 months for SoFi have been very strong, and I do think in Q4 of this year they will post very strong numbers once again. So thank you for watching the video all the way to the end. Please hit that like button and subscribe if you already haven't done so, and I'll see you in the next video.